Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hi everyone, it's Phil Tarrant here. I am the editor of Smart Property Investment and the host of the Smart Property Investment Show. Thanks for tuning in. We're going to keep on our sort of drive, most recent drive, I guess, of bringing investors onto the show rather than experts within property. And I quite like it, chatting to investors. I think it's pretty cool. It's the basis of the show and why we created it, essentially. Today's guest is a guy called, and I'm going to struggle with this, but I'm going to try and get it right, Taku Ekanika.
You almost got it. I think that's pretty close.
Is it pretty good?
It gets butchered all the time, so it's all good.
Taku, how you going, mate?
Very well, thank you.
So I'm also joined today, and he's new to the Smart Property Investment Show. He's one of my colleagues here, Tim Neary, who is the editor of our real estate product called Real Estate Business, which is for sales agents and people that work within the industry. So Tim, how you going, mate?
Good, thanks, Phil. Thanks for having me on the show today.
Yeah, but this is Tim's first time on the show. So Adam, who's our sound engineer guy here, I'm going to give him a brief not to edit anything that Tim does. If he stuffs up, we're going to leave it in there. So
thank you, Phil.
Just put you under pressure, mate. It's all right. But
no pressure.
So running on what I was saying just a little bit earlier, we've had a lot of investors in the show recently, Taku, and there's two types of people we get on the show. One is people that work within property, so let's call them property experts, and they might be buyers agents or data people or mortgage brokers, financial planners, accountants, this sort of stuff, who sort of provide advice around how to be a better property investor. And the other type of guest that we have is property investors, so people that are out there doing it. So a lot of the feedback we've been getting is that people really enjoy, the expert stuff's good, but they really enjoy the stories of investors. And I think yours is going to be a really interesting one. As our listeners know, we there is no sort of scripting with this show whatsoever. This is just having a chat, really. And but before I get on here, the guy sort of give me some information, and it's all very brief, but you could probably pick it up from Taku's voice. He's pretty young. How old are you, mate?
28.
Yeah. So on the younger side of property investing.
Pretty much. I feel as though I got started pretty late, but it's all relative, I guess.
So how many properties are in your portfolio?
As of Saturday, actually, 6 now.
Okay, last Saturday or this coming Saturday?
Just the Saturday that went by.
Okay.
Bought at auction up in Queensland, which was pretty unplanned, but got it under the line, so it was all good.
That's pretty good. So why'd you buy another property?
Why did I buy another property?
Yeah. Because
the money was there to be borrowed, and it was a good deal. It was well below market value from all the research that I did, and I thought I'd just go for it. And it worked out well. There was not many bidders either that was bidding for it, so ended up getting...
So we're recording this in November, and we're getting to that time of the year when some of the energy around property investment or buying property starts to sort of wane a little bit, where people start thinking about the silly season and buying Christmas presents and spending all their time doing that sort of stuff. And in our portfolio, we've picked up some really good properties running up into the December period, purely because there's less people at auctions.
Exactly.
You never know your luck, right? If you're on the ground and you're out there and got a pre-approval and you're rocking up, sometimes you don't have that same pressure. So tell me about the auction that you just was the top bidder on Saturday. Was that, what was it for, and what happened?
It was pretty unplanned. The real estate agent called me on the Friday morning, and he goes, "Look, we got a property that's coming up for auction tomorrow. A contract crashed on it last week, which was due to finance. That contract was at 345. So he goes, if you're in a position to bid at auction tomorrow, I think you could get it in the low threes." He said there was only 2 other bidders at the moment that was registered. They were both interstate investors, and they both hadn't viewed the property either. So I knew that they were going to be pretty risk adverse as well. And the real estate agent said it's a deceased estate, so he has to sell tomorrow. At the time, I didn't know if he was just pulling my leg, because you always get, real estate agents calling you last minute saying, do you want to bid at this auction? You might have a good chance at it to get it really under market value, just to drive some interest to the property, of course. But it just seemed like the numbers were stacking up on it. And speaking to him a little bit more and finding out a little bit more about the property, he mentioned that the property was going to get split between 4 people. So I knew that in their minds, if they were going to sell it for, let's say, 50K, a little bit less, it wouldn't be too much of a deal for them, big deal for them either, because it was going to get, that 50K would have got split between 4 people. So 10, 12K here or there wouldn't really mean anything for them. So I knew they had to sell. There wasn't any tenants in there, so it was just costing them money to hold on to the property. So I was like, hey, if I could just register, take a bid, and then take a shot at it, I might be in with a good chance.
So everything you're telling me, ideal scenarios for property investors.
Yeah, the stars were lining up there.
Yeah, that's good. So what'd you get it for?
I ended up getting it for 300,000.
Okay.
And I was able to negotiate 80-day settlement on that as well. So it takes me beyond the Christmas and holiday season. So it's going to be easier to find tenants as well. And it gives me a bit more time to collect all my finances together as well.
Did you negotiate the 80-day settlement before you registered the bid, or did you try and do that after?
I did that during the negotiation process. So it got taken offline. When I say offline, so as I said, there was myself and 2 other bidders. The 2 other bidders stopped bidding, and it was between myself and the vendor now just going back and forth. I stopped at 290, and they said there's no way they're going to go below 300.
So it was a live auction, and it went to 290. And
Yep.
was it passed in at 290? And they said, no, we're not selling it, but you were the...
I was the only bidder there, yeah.
Okay. Talk me through that process where they went, you finished at 290 and they went, not enough, pass this thing in at auction.
Yeah.
What happened after that?
So after that, the negotiation process started happening, and the auctioneer came back to me and the real estate agent came back to me saying, look, there's no way they're going to sell at below 300. That's their absolute limit. They've already have an offer on the table there after it gets passed in at 340 or something around that nature. And then I was like, look, at the end of the day, you need to sell today. You can't afford to have a contract crash again. You guys need to sell. It's a deceased estate. This is a sure thing. You're definitely going to get a sale here. If I can get it for 290, let's just sign the contract. I just want a quick and seamless sale. And then he's like, unfortunately, they're not going to go below 300. So I said, can we do an extended settlement of 80 days? And then I'll lift it up to 300. And yeah, got it for that price.
So in terms of negotiating, you've done a lot of things right there. So the first thing you negotiate on is price, and then when that gets to a point where it's not going to go, you're not going to go any higher, and they're not going to come any lower, you start looking at the other things that you can negotiate on.
That's right.
And one of them is settlement terms. So 80-day settlement's going to take you into January, late January.
Exactly.
So. You're Sydney based. Did you fly up to Brisbane to do this, or you did it on the phone?
I did it over the phone.
Okay.
It was sight unseen, so there was a bit of risk on my end. But I knew that if I could get it for cheap enough, if I could essentially get it for land value, even though there would maybe be something wrong with it or needs cosmetic renos or something structurally wrong with it, if I can get it for cheap enough, it will still stack up in terms of the dollars and all that.
That sort of post-auction negotiation, did that happen immediately when it was passed in, or did it happen in the days after?
Immediately. Yeah, over the phone.
Okay, so they wanted to get acknowledgement of a sale straight after the auction rather than even going into the next day.
That's right, yeah. There and then they just wanted an unconditional sale closed on that day.
So how did you sign a contract and pay a deposit?
I had a bidder's authority form, and it was the real estate agent that was bidding on my behalf. Kind of sounds counterintuitive, but that was the only option I had.
Yeah. Well, I think maybe it's one for you to chat about, Tim, with a lot of the work that you do with agents. It sounds like the agent obviously was hustling to get this thing sold, so the agent needed to shift the thing. I don't know the background of it. How long was it on the market for?
Apparently it was a pretty short campaign, not that long. I only just saw the property the day before because I was actually looking in a different market at the time, but the agent told me it was on the market for about it was a 4-week campaign. And
sort of agents, Tim, in this sort of scenario where they have deceased estates or mortgage in possession or all this sort of stuff, do agents like those sort of environments, or are they headaches for them?
No, they seem to like those from what we can see, Phil, because that agents typically connect with buyers agents as well, I guess to look for property investors like yourself, to try and find some of those properties that can move quickly below market value before they get to the market. So they'd always be on the lookout for something like that and try and connect them with property investors like yourself.
It's a really good point, Tim. So as a property investor, some of the best properties that we've ever acquired don't even hit the market. If you're sitting there at an auction or an open house and there's a whole bunch of people sort of looking to purchase a property, typically it's going to go for way over where you want to spend on it. But it's the properties that don't hit the market or have a different type of scenario situation, which are the real crackers. And these are the ones where an agent, and the fact that you had a personal relationship with that agent gave you an advantage. So imagine that guy probably sat there on Saturday morning or Friday afternoon and had a list of people he knew were past clients or people he's had a relationship with, and just got on the phone like a good agent should do and just bang through that and pitch it out to as many people as possible. Yeah. But he's going to go to people who he knows, a buyer's agent, as Tim said, and the buyer's agent can go, yeah, that sounds all right, I'm sure I can find someone to buy that. Or a more savvy or sophisticated or experienced investor like yourself who gets it. So it's not like your first purchase and you'd be shitting yourself about it.
Right,
it's just process, right?
Yeah.
Come down to the numbers. So what was that? Was it a house, a unit?
It was a house. It was
Okay.
about a 400 metre square block of land.
Yep.
It's only 2 blocks behind where the water is.
Okay, which
across
suburb?
the peninsula, Scarborough.
Okay.
So it's about 45 minutes north of the Brisbane CBD, right on the water. Really nice area. It's getting a lot of gentrification from Redcliffe, a lot of the developments and things that are going on in that area. And yeah, it just made sense for me at the time. Even though it's only yielding about, at the moment, around 5.5%. I usually generally look a little bit higher than that. It just has so much, fat in that deal that I couldn't say no to it.
So essentially you were manufacturing equity in it at the point of sale, and there's 2 ways you manufacture equity. You buy under market value,
Yeah.
or you can actually increase the value of the property by spending as little much money as possible through
That's
a
right.
renovation. So what's your plans with the property? What are you going to do to it?
My plans with the property, first of all, would probably for the first 6 months not do too much to it. I just had my builder go through it today, and he said, look, it just needs a little bit of a paint, a little bit of a touch up, potentially new vanity, so all just cosmetic stuff. Probably cost me 4 to 6K.
Okay.
Just do it up so I can make it presentable, make it attractable, if that's a word, to tenants, and then put someone in there. And then probably about 3 months after, I'll revalue it again.
So a couple of questions associated with this. So you've got an 80-day settlement. So what happens to that property during the 80 days? Can you actively do any of that work that you need to do during that period of time so you can get a tenant in, so they're in there by the time you need to start paying a mortgage? Is that part of the deal?
Yeah, so one thing that I didn't do in this deal was get early access.
Okay.
So as you were saying, did not get that. So I'll have to do all the works straight after it settles. So that'll probably take about 2 weeks. So yeah, it's going to cost me a little bit in holding costs, but not too much.
But if you can tee it all up so you know the work that needs doing. So is there anyone in the property now? There's not, is there? Or
No
has it
one's
got a
in the
tenant?
property.
Okay.
It's just empty.
Just sitting there.
We've got a clause in there that I'm allowed to take tenants through before it settles in my name, but no work's allowed to be done on it.
So did you get any advice through this negotiating process on outside of price, the sort of stuff that would be beneficial for you, or did you just use your experience of the properties that you've purchased so far?
A little bit of both. I knew the longer that I could drag it out, the more comfortable it was going to be for me to gather all my finances together. And then also just doing a lot of research, reading, speaking to other investors. There's more to it than just price. There's other levers that you can pull on. One being the length of the settlement as well, which you can either use to your advantage, or if you make it shorter in terms of settlement days, then maybe you could reduce the price, for instance. So there's different levers I guess you could pull on.
This was an opportunistic buy,
Very.
and there's nothing wrong with that. But to be able to benefit from opportunistic purchases, you need a couple of things in order, and one is money. So did you have a sitting pre-approval, or you had nothing in the works?
I had a pre-approval, not for 300,000 though.
Okay.
It was a little bit less. But in saying that, my servicing, I can definitely get up to 300 pretty comfortably. It's now just coming up with that extra deposit.
Okay. And then is it 10% deposit, or is you negotiate?
I'm putting a 12% deposit on this one.
Okay. Why are you doing that?
I'm doing a 12% deposit. So there's a thing called lender's mortgage insurance. I'm sure a lot of your viewers would be wary of this. If you go above 20%, if you go 20% or more in deposit, then you don't have to pay lender's mortgage insurance. If you go under it, you have to start paying lender's mortgage insurance, which is not to cover you, but to cover the banks. It works in increments, the lender's mortgage insurance. And speaking to my broker and my mentor, he let me know that 12% is kind of the LMI sweet spot where you get the most bang for your buck when it comes to lender's mortgage insurance.
So in cash, you're putting 12% in cash, or are you borrowing at 88%?
Yeah, borrowing at 88%.
You're borrowing at 80%?
Yeah.
And 12% is cash money you're putting into
12%
it?
cash money, so
Okay.
36,000.
Yeah, okay. When you bought this place, did you speak to your broker beforehand and say,
Oh, yeah.
I think it's going to go 300. What do you reckon? Did he say, or she say, yeah, you'll be okay? Was it one of those sort of chats?
So I was, the night before I told him my max is 290. I'm not going to go any way over 290. And then he's like, yeah, that's cool. You'll service fine for that. You can even go up over 300, a little bit over 300. So I kind of knew that in my head as well. And during the time while I was on the phone to the real estate agent, I was Skype texting him throughout the whole process as well, saying, what do you think? What do you think? And, I just needed some guidance there as well. So he was there in terms of, just virtual chat.
That's cool. And looking at your portfolio, and we'll have a look at it in a sec, but do you have all your finance with one lender, or do you have multiple lenders in your, as the lenders that you use to finance your portfolio?
I have different lenders. So the first one I got with ANZ, and then I got four 4 with CBA, and then the next one that I'm getting is with NAB. And I guess the reason for that as well is each lender has different criteria when it comes to lending, so it's not all just about getting the lowest rate, but you got to strategically place which loans you get at what point in time of your property investing journey, and that's what I learned through my broker, and yeah, that's how we strategically aligned our purchasing.
And how active is your broker in understanding your property investment goals and actually playing a role? Are they very active, would you say?
I'd say he's pretty active. I call him a broker, but he's kind of become more of a mentor as such.
Okay.
I mean, he's kind of taken me under his wing. He's a property investor as well.
Yeah.
He's kind of showed me the ropes of how he got to where he got to in the time that he got to there as well. So I started just replicating his process. There's no need to reinvent the wheel. I just followed his blueprint, and I'm sure he followed someone else's blueprint as well. So.
And how'd you find your broker?
Through a forum. I read his story first about him, and then I reached out to him on LinkedIn, and I said, look, I just want to pick your brains. I didn't even know he was a broker at the time. I said, I just want to pick your brains. I'll buy you a coffee. Can I meet up with you? And he's like, yeah, no worries. We'd love to catch up. And then met him the next day. Had it was about an hour conversation with him. And at the time, it turned out that he was transitioning out of his main job, his corporate role, into the broking world.
Okay.
And I was like, oh, come on, let's go.
It's good to be so proactive.
Yeah.
And we talk about this a lot on the show, Tim.
Yeah.
It's about research, it's about educating yourself, and you find, and it's one of the great things about property investors is that property investors like talking to other property investors about what they're doing.
Yeah.
You find there's not too many who are closed books, and people are happy to share their journey and their story, and hopefully instill some of the same energy that they get in property investment, but help people along the way. So it's good to see that your broker was so open with you. Obviously, he's making a bit of money out of you because he's arranging your mortgages. But outside of that, that he's sort of taking you under his wing and helps sort of grow your knowledge and expertise in this space. So that's cool. It's really good. So your portfolio, that's the 6th property that's in it.
That's the 6th one, yeah.
So you ran through the lenders that you had. So you started off with ANZ, then you went CBA, and then you went NAB. Let's have a quick chat through the other 5 properties in your portfolio.
Yeah.
So the first property that you purchased was where?
First one was in Brackenridge, so that's about 15 to 20 k's north of the Brisbane CBD.
Okay.
And that was a 3-bed house.
Yep.
On over 600 metre square block of land. It was a 322.
And what'd you pay for it?
378, that one.
378. And value now?
12 months ago, we got a bank valuation of 420.
Yep.
The market's moved a little bit, so about 450.
450. Okay. And you bought that in 2014?
Yeah, October.
Okay. So two and a bit years ago.
Yeah.
Property number 2?
Was Eagleby. So
Yeah.
that's in the Logan Shire. And that one was a 322 as well.
Okay. So another house. Yep.
Bought that one for 258.
Okay. Today?
Got to be around that 320, 310 mark.
Okay. Call it 310 to be conservative.
Yeah.
Property number 3?
Property number 3 was in Deception Bay. That was a little beauty. That was a little bit of a renovator. And that bought for 232. And we just got it bank valued for 320.
Okay.
Yeah.
And when did you buy that?
I settled that one in, I think it was December or January of this year.
December or January?
It's December
2015.
2015.
Yeah. So you made 100 grand on that pretty much in a year.
I mean, that's been an absolute
Deception
godsend for
Bay
me.
there's a lot of people talking about that at the moment. It's not a bad little place. Property number 4?
4 was Kalanga.
Okay.
I bought that for 253 and got a bank val on that for 312,000. 4 weeks after settlement, we did a renovation on that one as well.
Okay. So you're 50k on what the thing was, but was that after the renovation or before?
After the renovation,
okay.
We got the bank valuation.
How much you spent on your reno? So it just shifted from 253 to 312?
253. So the Kalanga one, that was 16k reno.
Okay, 16. So less 16k. So you manufactured 40 odd grand out of that, right? Yeah, it's good. And the 5th property?
The 5th property is in Adelaide.
Okay.
So that one's in Salisbury. And that was a 4-bedder. It was 220,000. That was also a renovation job.
Okay. Val after the reno?
We haven't done a val on it because I only settled on that 4 or 6 weeks ago.
And the reno's done though?
Reno's done. Renting for 330.
Okay. So I like the fact that you know your numbers. Mm-hmm. It's good. You need to.
Yeah, absolutely.
Yeah, I know all my numbers. And you speak to a lot of investors that don't know. You've got to sit there and think about it. But the fact that you're snappy, number 1, number 2, number 3, number 4, bought for this, did for this, it's good. You need to know your numbers. It's a good lesson for everyone.
Definitely got to know your numbers, especially takes emotion out of the deal, right? You just base it on facts, numbers, and it's all logic.
So total valuation of your portfolio now?
I think with that latest purchase, with Scarborough, it's closing in on 2 mil or just a tick over 2.05.
Okay. And what sort of debt have you got?
Got 1.56.
So you made about 500 grand, right?
Yeah.
450, 500 grand.
Yeah.
In 2 years.
In 2 years, yeah.
That's all right. How much cash have you stuck in of your own?
So I started the first one with a bit of a nest egg of around, I think it was just under 70K or a
70?
little bit more.
Yep.
And then a lot of it after that was just manufactured equity. It was done through renovations, and then revaluing it, pulling out that equity, and then just recycling that equity onto the next one.
Okay, so you put 70 into it. You haven't tipped any more of your own cash.
Oh, I certainly have.
Yeah,
Put
okay.
a little bit more. I reckon at least another 70 over the 2 years.
Okay, so you're all in for about 140.
Yeah.
With about 450 grand.
Yeah.
Of equity in there over a 2 year period. It's not a bad return.
Oh, absolutely not.
You know,
Yeah.
You've more than doubled your money, so which is good. Which is a really good way to think about this. But you're a young guy, right? You're 20. Well, you're not really young, but you're sort of in your 20s.
Yep.
You got 6 properties under your belt already. Like, why are you investing in property?
Yeah, that's a good question. I always think, why do I invest in property? Because sometimes when I get so focused on the numbers, it's just ticking the next one off. But I first started because I wanted financial freedom. I wanted to retire off passive income. And for me, property was what made sense as a vehicle to get me to that passive income. I was reading a lot of personal development books and reading a lot of things around financial freedom and how to create wealth. And with that, they generally came around 3 key areas, which was investing in shares. And at the time, and even to this day, it doesn't really resonate with me, the intangible nature of shares. Yeah, don't really understand it. Driving your own or creating your own business. I would love to create my own business one day, but don't really know what that is yet. So that was kind of put to the side. And then there was property. And it was simple to understand. It was easy to get. You buy property, you put tenants in, money comes out. And if you buy in relatively close to capital cities, with good amenities on a nice big block of land, over the long run, it's generally going to go up in value significantly as well. So.
Yeah. So is there anyone in your family or your peer group who has a bit of a property bent who you've tried to emulate or mirror at all? Or are you quite a unique thing within your family type?
I'd say, my dad owns his own house and he has 2 investment properties. So that's probably the closest person, I guess, within my family that would be doing that. And aside from that, it's, my close group of friends don't really invest in property. And I just learnt it through research and connecting with the right people.
Why is that? What makes you different than your mates?
I don't know. I always had a desire I'm quite ambitious, quite driven. And after I saw the success of that first property and really came to fruition and it was real, then I just got addicted to it. And I just got completely immersed in property investing, and I knew this was the vehicle to get me to where I want to get to if I wanted to retire early. So
sounds right, doesn't it?
Yeah, it does, Phil.
Wish I was doing that at 28.
Absolutely.
Instead of drinking, No, it's cool. So moving forward then, is there, so in terms of goal setting, and everyone sets goals differently, and you're still a young bloke and your goals are going to change over time, but do you have a number, i.e. a passive income that is the number you need so you can stop having to work or having to generate income elsewhere? Is that the goal for you? Or is it a value of property, or is it a number of properties? What are those tangible things?
It's a mixture of both. I have a short-term goal and a long-term goal. So the short one first would be have equity of at least $1 million in this time next year, so in 12 months' time, and have at least 10 properties by this time next year as well. So it's a bit of a balance of both. And then long-term, by 36, I want to have a net passive income through property of $1 million.
Okay.
Yeah.
Sounds all right.
It's just a round number. I don't exactly know how I got there, but...
But the way that you're talking about goal setting is quite mature. I speak to a lot of property investors and they're like, I want to get like 10 properties or whatever. Mm-hmm. But the way that you're framing your goals, as in you use the terminology short-term goal, long-term goal. Where have you got that from? That
I got from reading a lot of books. I follow a guy on YouTube and on podcasts and all that called Grant Cardone. And he's just completely shifted my thinking, completely shifted my life 360. He's all about goal setting. He writes his goals once in the morning, once in the evening. So he's always got his mind.
And you do the same?
On what's important. Yeah, I do it once in the morning, once in the evening as well.
You actually sit and write it down?
Yeah, it's a lot more difficult than when I first imagined to just continue that discipline. But it keeps your mind on it every single day.
Let's have a quick chat about this. And are the goals that you write down personal goals, or are they financial goals?
These are essentially all personal goals. I have a couple of work goals where I'm currently at right now as well. So I write those down from an income perspective. Don't really have too much from a family or a social perspective right now. It's more financially driven.
Nothing wrong with that.
Yeah.
You're a salesman, right?
Yeah.
Yeah,
that's
you
right.
can tell. You're like a lot of the guys here, you know, but you sound a bit more structured. It's and how do you write those goals down? Like, when do you do it? Is there a particular time of the day? I'm drinking a coffee, I write my goals?
Yeah, pen to paper. So just old school. As soon as I get out of bed, write it down. Before I turn the lamp off, write it down. So
you keep it next to your bed.
Keep it next to the bed. Yeah, just a little notebook.
Okay, and you're writing. Sorry, Tim. You write it in the same notebook every day.
Every day, yeah, in the same notebook until I run out of pages, and then on to the next one. But yeah.
Yeah, no, just Tucker was saying off air before we started that you also work on the weekends, do something else, and I hope you don't mind me saying, but that you're an Uber driver as well. So just it reiterates how driven you are and how important it is to you. But a lot of the investors that we talk to often talk about keeping a handle on their portfolio as it starts to get bigger and bigger. You spend a lot of time writing your goals down, you spend a lot of time doing your work. It'd be interesting just to know how you manage your portfolio and obviously you're a tech savvy guy, so how do you use tech to help you with that?
That's a really good question. In terms of how I manage my portfolio, I generally for the day-to-day stuff, I generally pass that off or outsource it to property managers or the people that are professionals within their space, which obviously takes the burden off me. But in terms of things such as renos or anything like that comes up, I'll try project manage it myself throughout that process. But yeah, when it comes to the day-to-day activities, it's all outsourced to property managers, solicitors, broker, and just my close group of people.
So you have like a professional team that you work with?
Absolutely.
The same guys all the time? Has that built up over time?
Yes, I'd say it's built up over time. In terms of the people that I've kept around me, like for instance, for all the Brisbane purchases, I've kept the same team around me. But I guess once I start to invest in different areas, I'll have to start increasing my circle of property professionals.
What are you going to do with $1 million in passive income every year?
I like to spend a lot of it, but then that said, I mean, I wouldn't be able to spend $1 million. Oh, I probably could if I wanted to, depending on how lavish I'd wanted to live. But
do you want a fancy car and all that sort of stuff?
Oh, absolutely. Yeah. I mean, eventually, right now I'm driving a crappy little Mazda 2. So eventually I want to get into that, a nice luxurious Rolls Royce or something like that. But
cool.
At the end of the day, I'm not going to be able to spend everything. So it's more about giving back to the community, giving back to, the ones close around me. If I can set them up as well, that's going to be something I think that I'll be able to get a lot more out of than just me just spending it on materialistic things.
That's good. So sort of like a philanthropic type beat to it all. So in the future, at the moment, you're just in acquisition phase.
That's right, yeah.
To start generating that. It's good. We're running out of time. I've really enjoyed the chat.
Awesome.
Thank you, mate. It's I'm really impressed. You have a level of maturity about you that we don't really see in 20-somethings. And I guess you're a millennial, right? We've been giving millennials a bit of a hard time recently on the show. And I'm pro-millennial, but I get a little bit frustrated with some of the gripes that they have. And one of the reasons why is that we get guys like you in here. We had a really good guy the other day and another girl come in as well who are really bucking the trend about, all the trials and tribulations that Gen Y are having or millennials are having getting the property market. It's guys like you who say, what problem?
Yeah, exactly.
You're excelling and driving forward. So I imagine a lot of our listeners and a lot of younger type investors, 20-somethings, listen to the show. You're definitely someone I'd be trying to emulate because the way you're going about it, I think your risk appetite is, you're a bit younger and you're probably willing to give it a bit of a go. But when I look at your equity position from an LVR perspective, you're not drowning, right? We didn't sort of go through it, but how do you sleep well at night in terms of knowing you can meet your mortgage repayments? Yeah,
I sleep pretty well at night. No two dramas on that front. That's because I always try to continue to keep a pretty healthy yield position as well. So my overall portfolio is sitting around 6.5%. So it gives me about a 2% buffer if interest rates are at 4%. So that covers the expenses and repayments and everything of that nature as well.
So some people would think that you're very aggressive in terms of your acquisition of property, 6 over 2 years, and you know what? Yeah, you're giving it a go, right? But you're doing it not flippantly. You're not throwing mud on the wall and hoping it sticks. You actually got some structure and sophistication behind it, which is a very good tip, I think, for our listeners. So, mate, I really appreciate it. Before you go, I'm gonna rattle through a couple of things, and I want the one tip that you've got.
One tip?
Yeah. It's Taku's top tips for for property investment. Okay, I've written down 4 little areas here. I'm going to say, what's your number one tip for goal setting?
Number one tips for goal setting: have a timeline, make it really specific as well, and write it down every day. in the morning, in the night, so it's at the top of your mind all the time.
Good.
Yeah.
Number one tip for buying investment properties.
Always buy something that you can add value to and buy below market value. It's easier said than done, of course. You need to know the area and you need to know your numbers, but you got to make money on the way in.
Good.
Yeah.
Number one tip for renovating investment properties.
Don't overcapitalize. So a lot of the areas that I'm investing in are bread and butter areas. So I'm not going to put a nice marble tabletop on my kitchen. I'm just going to Laminex it, keep it pretty simple, because it's going to appeal to that crowd.
Number one tip for property management.
They have to have good communication, both email, over the phone, and also do a couple of referrals to people that are already existing clients with the property managers.
That's good. And finally, your number one tip for financing investment properties, other than get a good broker, which sounds like you got one.
Number one tip for financing.
12% sweet spot.
12% sweet spot, that's certainly one. I guess in the initial stages, especially if you're on the younger side, such as myself, I'd say leverage yourself a little bit more than what you're comfortable with. Well, I don't know if that's a good tip, but because at the end of the day, you've got a little bit more time to, reduce that LVR position. So leverage yourself now. I guess that's one of the beauties of property as well, is that you can leverage your money.
Absolutely. And it's one of the things that most people struggle with the concept of, to be fair. The whole idea of leverage and making money work for you. So it's good. Yeah, cool. Really good. I think they're all really good tips. I'd be writing them down if I was listening to this and
awesome.
Stick it somewhere and keep referring back to it. But the one thing I'd take away from this conversation, Tim, is knowledge. You're being able to build a healthy portfolio, or the start of a very good portfolio, because you've gone out there and educated yourself. You have invested the time into actually knowing what you need to do to be a good property investor. You haven't seen a glossy brochure for an off-the-plan apartment in Bondi Junction and dropped $700,000 on it. And a lot of, I think, your success as an investor is drawn from your circumstances, and that is you're relatively young sort of guy. I don't know how long you've been in the job, but you work in sales. You probably earn a reasonable sort of income, but you're probably not able to go out there and borrow $700,000 or $800,000 to invest in one property.
Exactly.
So you're, in many ways, you're a product of your own success in that it's forced you to look at the type of properties that you're buying and looking at being able to get that initial equity position by buying smartly under market value. So all really good, mate. I think
really good. Yeah, I mean, that top tip that you gave there was to make money on the way in, and that's off the back of doing the research first. So
that's it. Yeah. Absolutely.
Thanks, Taku, mate. It's really enjoyed it. Let us know how you're getting on.
Thank you. Absolutely.
Keep in touch. And if any of our listeners got any questions for Taku, you can contact me, editor at smartpropertyinvestment.com.au. We'll pass them on. I'm sure you're happy to speak with other investors.
Always willing to connect with like-minded people. So hit me up.
That's good. Appreciate it. And any questions for me at all about the show, our portfolio, or any of our other guests, please do get in touch. Remember to follow us on all of the social media stuff, Twitter, Facebook, LinkedIn. You can follow me at Twitter at Philip Tarrant if you want to do that. Please keep those reviews coming on iTunes. We do appreciate it. The more reviews that we get, the higher that we rank and rate, which means that more investors are able to find us and share in the community that we're creating here around property investments. So please do that. 5 stars. We really like them. But please leave some feedback as well if there's anything that we're doing that you'd like us to do that we're not doing. Remember to tune in next week. Remember, smartpropertyinvestment.com.au is where you'll find us. Plenty of stories there on other investors, and also Taku, who we'll put up there with some information about his portfolio. Thanks again for tuning in. We'll see you next week. Bye-bye.